Good morning, everyone. Steve here from theturtlefollower.com, and this is going to be a special weekend update for Saturday, November 21st, 2015. Putting this together for all the members, free and premium together. And honestly, the last couple weeks I've been trying to figure out the best way to go about offering the premium membership. Part of me wants to offer the trading part of it, where we do a lot of short-term trades. Part of me wants to offer the longer term. And to do so logistically for me is difficult because it gets confusing because I also have my own stuff. So I figured, if we're going to do it, let's just do it as if it was my own stuff and forget about the paper accounts and everything. So we're actually in my real account right now. You could see, these are some of the charts we've been looking at for the past, 3-4 weeks. And, we're going to try and do it where, I really just use these videos and use the model portfolio on the website as a guide, and whatever trades are entered into my account and my account only. So we'll toggle between my trading account and my core account, and kind of give you some different ideas of what we can do for trading. So again, that's why I wanted to open it up to everyone. This way you can get an idea. This is what I'm considering premium membership 2.0. And it's just an evolution, okay? Just as everybody else, I'm a trader, and I evolve as a trader as I learn more things and learn what works and learn what doesn't. So, in order to get everyone the information that I use day in and day out, this is really the only way I know how to do it. So, if you have a better idea or suggestions, I'd love to hear it. Please leave a comment in the comment section below. Again, this is just my way of trying to evolve as a trader and trying to evolve the service as a premium service. So I hope you guys kind of stick with me while we go through some of these growing pains that we have. And again, we'll take it step by step and go from there. So let's start first with what we would normally do. Let's start with our stock market outlook video. All right, so we're looking here at the S&P 500 futures. And I want to try and clean up this chart a little bit. You can see here on the weekly chart. Let's go back to our 3-year weekly chart. Okay, you can see on this one we were trending right along the 200-day moving average. We broke below it, traded above it. Now we're kind of consolidating right around it. So I still think this is a huge level here. Obviously, 2120 on the futures, and you can see we have that resistance level marked here on the daily chart. What I do want to do is I want to try and clean up some of the stuff that maybe doesn't necessarily matter anymore. You can see that doesn't necessarily matter. We talked about this downtrend line that was in place from the 20th through the of July through about the 20th in August, and ultimately we had the trend line come down and went ahead, pulled back to the backside of the trend line, pulled into the 50-day moving average, and that's where it bounced. So it's just a kind of interesting to see that you can, when you break out, it doesn't necessarily have to be on a horizontal basis. You could break out of a downtrend line, and that's what we did here. We broke out, had this big bar on the 22nd, went up to resistance, pulled back, and sure enough, found support at the backside of that trend line. So I think that's important, but let's take that drawing off for now as well. Let's take this one off. All right. And now what we're looking at is really, let's even take this off and just adjust this. What we're looking at is really two key levels at this point. All right. You're looking at holding this 2012 area, 2010, let's call it. All right. You're looking at holding that area, and you're looking at breaking out of over 2113. Until one of those happens, really not much to do here. There's really not much else to say. All I'd say right now is that we're in a range, and we've been in a range for most of the year. We had that breakdown that kind of definitely hurt us a little bit, and ultimately now, we're moving higher and looking for some areas to potentially break out of or break down from. And until that happens, the S&P 500 futures are pretty much dead money right now. I mean, unless you're day trading them, pretty much in that tight range. Same thing here for the Nasdaq. Now the Nasdaq did break out to new highs on this huge rally, but let's clean this chart up again. Let's take out this. Let's leave that. You could see here was that breakout from a ascending or a symmetrical triangle. All right, but let's take that out. And here you go, same thing. Now you have another couple levels to trade against. All right, I would say that this level here, right around 45, let's call it 4,500, is probably more significant than this 44.40. But again, 50-day moving average in place, resistance up here, 47.31, support 4,400, and you also have trendline support. But here on the weekly chart, we never really broke down or stayed down under the 200-day very often. And this one, the difference is we broke back above the 200-day moving average, and we also found support at the 200-day moving average. So that's a key area right there at that 44.50 or 4,500, 44.50 area. All right, let's just call that one large range. As far as the Dow goes, the Dow has been a little bit of a laggard the last few weeks, but picked it up this week. All right, here again, let's clean this up. Let's remove this drawing. All right, you could see kind of what we were anticipating happening. All right, you can see we found support a couple times, found support and resistance at this 17,250. All right, we broke above it, went up, tested 17,958. We thought we'd come back, test the 50-day moving average. We pretty much got there. And then this week, look at this week, 5 straight up days in the Dow. So that, I don't know, we haven't had that too often, but we brought us right back up to this resistance point at 18,000. So again, trading range here in the Dow, I would say if you're up above 17,256, you're more likely to head higher than lower. But again, you know, I think right now, similar to the S&P, you're in this tight range that the Dow has been in for pretty much the entire year, and you want to see a breakout over 18,000 or a breakdown under 17,200. Until one of those happens, similar situation, you're pretty much dead money. And the last one, the Russell. All right, the Russell's been acting well lately, still stuck under this 200-day moving average, stuck under this 200-day, and the trend line. But now starting to maybe put in some higher bases. You could see we had this move right here. All right, so we hung out underneath the trend line. We then consolidated, broke the trend line by time, then finally broke by price, hit this resistance point right around 1,200, pulled all the way back to the support. All right, 1,130, and now we're in the middle of the range. So again, similar situation to everything else. Until 1130 or 1200 breaks, almost like you have dead money here. So this is where you want to see maybe you're selling some iron condors or something against the Dow, against the Russell as it moves sideways. All right, so you can always remember there's always ways to make money in the market. Doesn't necessarily have to be that you're long or short. You can even make money just by time passing. So that's another whole discussion for a different day. But, you know, just so you know, that's one of my income strategies is I do trade iron condors on the Russell and the S&P and try and just bring in a monthly income. All right, so there's a plenty of ways to skin a cat in this game. And again, you know, it all depends on what works for you and what doesn't. So I try and present everything that I do, what works for me. And, you know, you guys, I guess, can take that information and tweak it as needed. So with that said, let's take a look at the sectors and see what's been working over the last month. You can see here on the left in this watch list, I have them sorted by percent gain over the last 30 days. First one is going to be the XLK, which is the technology sector. You can see this one's actually poised for a potential new breakout, okay, over that 44.50 area. All right, so it's been consolidating for a good part of the year, right through here in this range. Besides that little blip that we had at this big move down, again, just consolidating now above the 50-day moving average, looking like it's getting ready to break out to new highs. So keep an eye on some technology names. We'll go over a few in the watch list. XLF, similar situation, maybe not as close to a breakout as the XLK. All right, but again, consolidating above the 50-day moving average, looking like it wants to go ahead and break out. XLY, discretionary. All right, this one, similar situation. Here's your consolidation on the daily. Here it is on the weekly. So again, looking at now, starting to kind of drill down into these sectors, it's looking like maybe the market wants to move higher instead of lower, which is, obviously kind of goes along with the thesis that we have that, we usually get a nice month or so rally towards the end of the year that really kind of solidifies the end of the year just because of the holidays and, everything like that. So, these sectors are kind of looking like that may be possible. Here's the XLV, which is healthcare, not nearly as nice looking as the others. This one's actually consolidating. Let's remove this. Consolidating below the 200-day moving average. Hasn't been below the 200-day moving average in a long time. So keep an eye on this one. All right, this one's under some pressure, but shorter term, it is above the 50-day moving average, and it is sitting right below this key level here. Right in this range between 72 and 73. All right, so again, just keep an eye on this. This could even break out and test the highs that we have back here at 77. So that's one to keep an eye on. Industrials have been acting very well. Some of the trades that we're in Raytheon that we just got in, those have been acting well. Lockheed Martin, Northrop Grumman. All right, so a lot of those defense names, for obvious reasons, acting well, and it's part of the XLI. So here you can see it did have a breakout on the daily chart. It's trading above the 50-day moving average. Trading now above this 55 level, which actually goes back to becoming support from even earlier in the year. So that was a huge level there. And now we're trading kind of in this range between 55 and 57. So again, not necessarily as good of a pattern as we had in the XLK or the XLF, but needless to say, we are breaking out among a couple different sectors, and the S&P over the last month is up 3.69%. And these other sectors have been outperforming that. The only other sector that is still is positive over the last month, but underperforming the S&P is the XLB, which is the materials. All right, so that probably stems from a bit of a short covering rally, because these have been beaten down for a good part of the year. You can see now they are trading above the 50-day moving average, but we had this huge pullback right up to the 200-day and this old support, which was, let's see what level that was at. All right, that was right here at this 46 level. All right, so 46 level, this would be an area where I would be a little concerned with taking any materials trades, just because we do have some overhead supply in there that people are going to start selling some of these names just because they're maybe coming up and hitting an old support, which is now becoming new resistance, similar to how we broke out on the S&P 500, where we broke out, came back and tested. Same situation, we broke down, came back and tested that breakdown level, and now may want to head lower. So even though we are consolidating above the 50, not really my type of trade here. So I would say if we're looking for new positions, we want to kind of focus on these top 5, the technology, financials, discretionary, healthcare, and industrials. All right. So now moving further on, let's take a look at the current positions that we have. First, we're going to look at the trades that we're in for some longer term names. All right. And then we'll take a look at what we're in. We'll switch the account and we'll take a look at some of the shorter term names, some of the trading names that we're in. So here, TSS we got in on this breakout here, right through here. I think it was right there actually. And had this nice big move, now consolidating again. So this is one where you got to kind of play this one how you want to. I mean, you could obviously use this 50-day moving average and use this trend line, but the trade is starting to work. All right, so now you're kind of risking almost, we're at 55, you're risking to 47. not really how I want to play that. So I'm going to take and trail my stop up on this because we're getting a new breakout up to 52. And this is also a spot where you can look to potentially add to that position. So you could use your new stop level at 51. We're at 51.84 to be exact. So you want to call it 51.50. Say we're trading at 55. So that's a $3.50 risk. All right. And then, what are you willing to risk on a trade? So say, for argument's sake, it's just to make my math easy. Say you're willing to risk $350. Then you want to have 100 shares. So see what you have. If you don't have 100 shares, bring it up to 100 shares. So that's one that you could potentially add to. Yield isn't that great. So as the stock has moved higher, the yield has obviously gone down, but it is breaking out to new highs. So if you're looking to and you're so inclined to, you can go ahead and take this, add to that position, trail your stop up to 51.84. Another trade here is Home Depot. All right, so Home Depot we've been in for a long time, actually. I think we actually got into Home Depot all the way back here, somewhere in this range. I'd have to check my notes, but I want to say it's somewhere back in here, and we've kind of sat through all of this nonsense, and now it looks like Home Depot's starting to work again. All right, so we've trailed stop to 118.50. All right, nice new breakout here on Home Depot. And again, if you want to, you're so inclined, go ahead, trail that stop up. You're looking at about a $12 risk on that trade. So, again, using that number, whatever you want to risk per your portfolio. So again, if you have a $100,000 portfolio, you want to risk 1%. You're going to risk $1,000, and here you're risking $12 per share. Divide 1,000 by 12, and you get whatever 800 shares about. Or 800. Nope. You're gonna get not 800 shares. You're gonna get 80 shares. All right, so that's about $960. And that will be your position size. All right, here we are. FISSERV. All right, FISSERV has been consolidating. You can see we had this breakout here. All right, breakout right through here. We're able to trail stop rather quickly. We trailed to 90.62. And now here it is, 94.31. So if we can get that breakout that we're looking for over, let's call it, let's see what that actually is. If we can get a breakout and close over 97.40, then we're going to go ahead, trail that stop up 94.31, and potentially add to that position as well. And you can see right in here in the column on the left where I'm going down my watch list, the P&L open on the positions. All right, so I'm up almost 13% in TSS, 6.5, 6, 5 in LMT. And again, LMT, similar situation. All right, looking like it's breaking out again. So again, this is a spot that if you want to, you can add to your position. So just go through, I have that calculator, but it's just a simple Excel formula. It's your stop minus the current price, gives you your risk per share, and then that gets divided into whatever your portfolio amount is and how much you want to risk. So again, 1% of a $100,000 portfolio is $1,000 in risk per trade. Divide your risk per share by your risk per trade, and so on and so forth, and that gives you your position size. So here you go, nice big breakout in LMT, and it just continues moving higher. Here we are with Northrop Grumman. All right, we've trailed stop, as you can see, a couple times. This was one that we got in on this breakout back through here. All right, I think we actually grabbed it right before earnings, which is I'd have to again check my notes, but I think we grabbed it right there. I'm not 100% sure on that. And we had this big pop. We had sat through this big pullback. Now we're starting to get that move again. So you can see, swing low has been defined, and now our stop is in place, 178.20. Starbucks up 2.75%. And again, this is one, grabbed it on this breakout and really sat through a lot of nothing. All right, we had a nice move, pulled back, and here we are bouncing off the 50-day moving average and looking for a new breakout level over this 64 area. All right, so we get a breakout over 64, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40, 40 64, 64, 64,